The crypto markets just had a flash crash, and the result of this is that most mainstream altcoins are down roughly double digits across the board. Now, there's two main questions at the front of everyone's mind here, being why did this happen, and is this something to be worried about? So what I want to do in today's video is take some time, answer both of those questions, and talk about the real reason why the crypto market just crashed. And I'm using quotations here because we're literally at the same price that we were just a few days ago, like literally 2 days ago. But I know that this is going to get blown out of proportion, and there is actually a reason as to why the crypto markets were pulling back here, and I want to kind of make sure that I make everyone aware of that in today's video. So let's start things from the top. What happened to Bitcoin? How's the crypto market looking? Well, we have Bitcoin down about 6%, and from the top of this pullback to the bottom of it, it was overall about an 11.5% pullback. Nothing too crazy, pretty typical for the crypto markets, but it is one of the bigger moves, and as of yesterday, we are seriously just coming off of a new yearly high for Bitcoin. Ethereum doesn't look too different. Ethereum pulled back about 6.5%. On the day so far. But then once you get into the altcoins, you start seeing the double digits, like Polkadot down 11%, AVAX down 10, Gala down 14, Alluvium down 10, other things like Immutable X is down 10, Chainlink down 9, etc. So, at face value, this looks a little rough. And then you have to remember, again, Ethereum almost hit new yearly highs yesterday, and Bitcoin did hit new yearly highs yesterday. So when we look at where we are in really comparison to previous price, we are at the same price that we were at on January 1st, which is like 2-3 days ago at this point, depending on when you're watching the video. So at face value, this looks bad, but there's a couple of technical things to look at, and then we'll talk about the real reason why this happened. The technical things is that the uptrend still held. We pierced through and we bounced right off the 50-day moving average, right off the bottom of this support line where we have seen numerous bounces in the past of Bitcoin, and we bounced off of both of these areas really, really well. Now, for the fundamental reasons why this happened, there's all sorts of stuff that's floating around. There's, hey, MicroStrategy is trying to sell Bitcoin. They're trying to sell company shares. Maybe Coinbase is trying to sell stocks. They're trying to sell crypto, all this other stuff. I even saw things like, there's liquidations of leveraged positions happening, which there definitely is with a move like this. I don't want to say that there's not. There is, but the real reason why this happened is that Jim Cramer claimed that Bitcoin was here to stay. No, I'm just kidding. This isn't the real reason. I think a lot of people would maybe say that this is the real reason. And if you don't get the butt of the joke here, it's that a lot of people claim that there is an inverse Cramer theory, which is honestly right quite a bit of the time. But basically, anytime that Cramer says to buy Bitcoin or sell Bitcoin, or that he's long or short it, or that he's bullish or bearish on it, it does the opposite. And yesterday he came out and it was like, Bitcoin is here to stay. It's a marvel, blah, blah, blah. And then, of course, the very next day we dump. So there's going to be a lot of people kind of, memeing about this. But the real reason here why the crypto markets pulled back was it looks like there are rumors floating around of a Bitcoin ETF delay. Now, why is this a big deal? Because most people were actually expecting multiple Bitcoin ETF approvals around the middle of next week, around, between Monday and Wednesday of next week, the 8th and the 10th of January, 2024. Now we're seeing some information saying, hey, we might actually not be getting those ETFs as early as we thought, and they might be getting delayed. So there's a little quote here I want to read to everyone before we move on, but I'm still very bullish and optimistic on the year, and I want to clarify that before I begin. So this says the SEC has postponed the approval for spot Bitcoin ETFs from Global X and Franklin Templeton, as well as an application from Hashdex earlier this week. These delays have become a reoccurring theme as the SEC remains cautious about approving Bitcoin ETFs due to concerns surrounding market manipulation. Now, what are the names that aren't mentioned here? Invesco, BlackRock, Fidelity, Grayscale, and maybe like 7 other people. There's a ton of names that aren't listed on this delay list, which, and it's kind of funny, and the markets are already starting to rapidly retrace because they're not mentioning a lot of the big names. They're not saying that a lot of these other players aren't going to have Bitcoin ETF approvals. It's just saying, hey, a few of these, like 2 or 3 of these might be delayed, but it doesn't say anything about the rest of them. Now, could the other ones be delayed? Yes. But I think the big kind of point here is that they're not being canceled. They're not being like shot down. It's just saying, hey, these might get approved at a later point in time than we had anticipated. They might be delayed a little bit. They're not being canceled. They're not being like proven wrong. None of that's happening here. And I think that's the big misconception with this, is that it's really twofold. People think that delayed means that they didn't get approved, being the first misconception. And then the second one being that all the Bitcoin ETFs are delayed. And that just, from the data that we have available now, that just is not the case yet. A lot of names are not mentioned on this list. Now, I think one of the other cool things is that we not only have these Bitcoin ETFs that are still in the works, but there was nothing mentioned about the Ethereum ETFs being delayed. I mean, these things are looking at, I believe, an April-ish approval date. Now, who are the names on this list? Oh, well, we have BlackRock, Fidelity, Van Eyck, Grayscale, ARK, Galaxy, Invesco, Bitwise, Hashdex. The list goes on. And I haven't seen anything negative about this. This seems to be working in the background, and I'm kind of curious to see how the narrative will shift after all these Bitcoin ETFs do get approved, because I think it is a matter of when, not if. And again, I think that's a big thing for people to watch out for over here. And then the other thing is that I'm really not too worried about the future of the markets here. And I'm actually, and again, nothing I say here is financial, legal, or tax advice, but when dips like this happen, my first instinct is to go and buy the dip. And I want to share with all of you two little pieces of information that I've been looking at. I'm going to zoom in here. And we're entering into an election year. And I can't remember if I've talked about this on the channel or not, but we're entering into an election year. It doesn't matter what side of the spectrum that you're on. The one thing that we can know is that most politicians want to get reelected. They don't want to run just to lose, with a few trolley exceptions. But for the most part here, politicians want to get reapproved. They want to make sure that the stock market does well. It's going to make them look better. And when we look at the average return rate during election years, it's around 11%. When we look at the average election rate during a re-election year, it's even higher than that. I believe it's over 12%. And the only times that we have seen a negative growth in the S&P 500 during an election year was during the three major crises of like the last century, being the World War II, the 2008 housing crisis, and the dot-com bubble. Like the three most traumatic recessions or depressions that we've had in the last 100 years have been the only times that the S&P has produced a negative return rate during an election year. Now, if you're looking at re-election years, which we are in now, it is a re-election year, then the S&P has not had a negative re-election year since 1940. Like nearly 80 years ago, 85 years ago. And we're going into one now. And so not only is the return rate around 12%, but we haven't had a red re-election year in the S&P for almost 100 years. And that's something to kind of take note of. And so there's a lot of things happening in the background. I had this article up. Looks like I'm getting hit by ads. But basically, we are expecting a number of rate cuts as well. And people are going to be listening to this and they're going to say, Brendan, why are you talking about like the S&P? Why are you talking about rate cuts? Why are you talking about all this other stuff and growth rates and election years? Because all of this will make investors more risk on. These Bitcoin ETFs, they were not shot down. At the very worst, it looks like a few of the many might be delayed at the worst case scenario from what we know right now. And then not only this, we have Bitcoin ETFs, we have Ethereum ETFs, we have the halving, we have all this S&P 500 compared to election year data that we looked at. We're looking at between 3 and 6 interest rate cuts. The interest rate cuts and the election year stuff will make investors more risk on. What's an on-risk asset? Bitcoin. What's going to be easier for investors to now get access once these ETFs come out? Bitcoin. It already is really easy for investors to get a hold of, but both retail and institutional investors are going to be more risk on. And I think one of the top risk on assets that's going to be on their mind this year is crypto, especially things like Bitcoin and Ethereum. Now, what else do we have? Well, we also have the Ethereum Dencum upgrade. What is the Dencum upgrade for Ethereum? Well, this is solving arguably one of the biggest issues in Ethereum right now. Now, does it completely solve it? No, but it definitely helps. So when you think of Ethereum, most people are going to say the biggest problem with Ethereum is the fact that it has maybe some scalability issues, slower transaction times, high gas fees, etc. Well, this upgrade is meant to kind of be the first step in solving that by introducing, I think it was proto-dank sharding, and I believe, I hope I said that right. Correct me if I'm wrong in the comments. But proto-dank sharding is one of the things that they're trying to implement in this, and the main result that they're looking for is to reduce the transaction costs and reduce the transaction time to speed up and cheapen the Ethereum mainnet and also the side chains as well. So there's a lot of stuff going on over here in the great world of crypto, and there's a lot of things to look forward to. Now, when we talk about like why the crypto market is crashing, is it something to be concerned about? Again, I think the main cause of this, kind of going back to the original question, the main cause of this crash was that there might be delays in some of the Bitcoin ETFs. Now, do I think that this is something to be worried about? I really don't. In fact, again, I say all of this stuff that I said earlier to say that I have a very big buy the dip mentality for this year. If we hold any kind of past data to the same standard that we have in previous cycles to this current cycle, whether it's the halving, whether it is the S&P return rates, whether it is rate cuts, whether it is like ETF approvals, looking at what happened to gold after its ETF approval, and I wish I had a picture of that on my screen right now, but if we look at what happened to gold after it got an ETF approval, like if we are going off of any kind of past historical like metric, everything would kind of point that this is a up year. And that's why when I see opportunities like this one, I can't help but want to buy the dip. And so we see things like this happen, and the last thing that I want to remind people of is if I go back to something like Bitcoin over here on the daily time frame, and we zoom out to the last bull run that we had back in 2021, the big thing to note is that we had ups and downs. Believe it or not, we had ups and downs during this bull run. Like here, we came right off the top. We rallied from this low, fell 20%. Here, we fell another 16%. Here, we fell another 11%. Here, Bitcoin fell another 10% on the way up. Then it retraced another 10% on the way up. Now, this was a big pullback. Here, it retraced all the way down over 30% to the downside, right to the 50-day moving average. And then again, it rallied to new highs and then retraced all the way back 25% back to the 50-day moving average. Then guess what? It retraced back to the 50-day moving average again at a near 20% pullback before hitting new all-time highs. And so when we're looking at where we are at, I'm going to zoom out right now, what do you know? You know, we didn't pull back 30%. We didn't pull back 20%. We pulled back 10%. So is this move justifiable in a bull market? Absolutely. In fact, I think in the coming bull market, we're going to see bigger moves to the downside than this. And I think that they will result with Bitcoin hitting new all-time highs afterwards. Again, we've seen it in previous bull markets where Bitcoin pulls back 10, 20, 30%, and in most cases to the 50-day moving average. And look what we saw here. You know, yeah, we saw an 11% pullback, but it bounced right off the 50-day moving average, which looks so similar to the 2021 run. So I say all this, am I worried about it? Absolutely not. In fact, I see a lot of these as buy the dip opportunities. Could it go lower? Yeah. I mean, we just said that it's not uncommon for Bitcoin to see a 30%, 40% pullback in a bull run. And, you know, I, for one, am actually welcoming those. I have dry powder on the sidelines that is ready to accumulate this stuff. And I'm actually pretty excited to buy the dips in the bull markets because arguably, you know, that's one of the best times to buy as opposed to buying while it's consolidating at an all-time high, while it's consolidating at the new yearly highs. You know, now we finally get a pullback. And this is the times where I actually get interested. And there are even outliers in the market. I think that's one of the cool things is that something like ENS is up like 20% on the day, despite most of the crypto market being red. Same with Say, which has been going on just this crazy run here recently. Even with the pullback that we're seeing on most of these crypto projects, Say is still green, almost double digits on the day, which is wild. It's seemingly unaffected by this. So the crypto market's looking great. There's a lot of stuff happening in the news. I know that this video might have been a little bit like, I don't want to say it was all over the place, but we had a lot of things to kind of talk about. We're coming off a big break. We're coming off the holidays. And there's so much that has happened that just needed to be addressed. So I hope all of you did enjoy this video. If you did, definitely make sure to hit that like and subscribe button. Check out the links that we have in the description down below. We got a lot of cool stuff. And we have more videos coming soon. So stay tuned, everyone. Thank you all for watching, and we will talk to all of you in the next video.